So we will start with Lauren, please. If you can introduce yourself and tell us a little bit about you and what you're doing.
Sure. Hi, everyone. My name is Lauren Ferstandig. I'm the Deputy Managing Director of Investment Origination at the Nature Conservancy's NatureVest team. So the Nature Conservancy is the world's largest environmental nonprofit. We have over 4,000 employees across 76 different countries around the world. And our primary focus when we wake up in the morning is 3 key conservation priorities: tackling climate change, protecting lands and waters, and maintaining sustainable foodscapes. And in 2014, the NatureVest team was launched by the Nature Conservancy to basically tap into the world of private sector capital with the hope that that's a new funding source to support TNC's, or the Nature Conservancy's, conservation outcomes. So the Nature Conservancy, the NatureVest team is the impact investment arm of the Nature Conservancy, and we are a nonprofit just like our parent company. Our job effectively is we're a deal shop. We're out there looking for opportunities to structure investments around that can deliver triple bottom line returns. So we're originating new transactions, we're structuring those transactions, and most importantly, we're doing some matchmaking with potential investors to match the right investors with each transaction. And since our inception in 2014, we've closed 13 deals for over 1.75 billion in assets under management in our closed portfolio. Our transactions vary really significantly across the spectrum. Our smallest deal is less than $2 million. Our largest deal is over $900 million. And we have quite a few in between, as well as kind of the risk return profile. We focus quite a few of our deals on more catalytic opportunities, impact first opportunities, that, as they're known, where we're working with investors who are willing to take maybe concessionary financial returns for a greater impact first perspective. But we also have projects in our portfolio that look more like a traditional private equity investment, that have a risk return profile that the majority of the market is more comfortable with. And that's how we're able to tap into scale. The only consistent theme across our entire portfolio is every single transaction has to have strong KPIs, strong impact metrics that support the Nature Conservancy's overall priorities. And I'll stop there. I could go on, but I'll stop there.
Thank you. I mean, you raised so many matters to talk about that let's discuss later. But I will say, Jeffrey, if you can introduce yourself, please. We can hear you. Not hearing you. Let's try again. No, you're in mute. If not, I will tell Sara. Let's try once more, and not if I will tell Sara to introduce herself while we solve the problems of the voice.
How does this sound now?
Now, yes.
Okay, you're welcome. My apologies. So I'll just introduce myself in a traditional way, which is what we do in our culture. So Tanchi Ani Bonjour. Kinu Kinu Inene, Indigenous Kas, Ottawa, and Donjnabu. And I do this to remind myself and others of our culture and to keep it alive and strong. I just said my name is Jeff Sear. My traditional name is Eagle Man Leading. I hail from a part in central Canada called the Whitehorse Plains area, which is the traditional buffalo hunt staging grounds. I live and work in unceded Algonquin territory near Ottawa, Canada, near the capital now. I'm a managing partner at Raven Indigenous Capital Partners and CEO of our foundation side. Really, Raven is Indigenous impact first venture capital. We are the only one in Canada doing this. We are the only one in North America. And we're pretty rare globally in terms of Indigenous led and owned capital in the space. In brief, Raven closed a $25 million fund in January. Where we invest in Indigenous social enterprises, really in ticket sizes between 250,000 and 3 million. We really work in the Indigenous innovation economy space, and I have lots to say about that later as we go through it. We also do outcomes financing on larger community level complex problems, but bringing innovative financial solutions into the Indigenous space. Which to me is really exciting because it changes lives and has huge impact on the ground. And then we do a lot of work on Indigenous impact measurement and created our own Indigenous impact measurement framework based on our epistemology and understanding of Indigenous ways of knowing and being. So this is what Raven is, and we're unique in the space. And very recently, we expanded into the United States, across the medicine line, as we call it. And we're placing investments in continental US and Hawaii at the moment. So maybe that's a brief introduction. We can talk more throughout the session about what Raven does.
Yeah, definitely. I will ask you to explain us further about it, because I'm sure all the audience is trying to understand better what you are doing and the kind of projects. Sara, if you can introduce yourself, please.
Of course. And what a beautiful mix of funds we have. So I recently left Omidyar Network. We are a long-standing Silicon Valley-based impact investor working across areas such as financial inclusion, property rights, data and digital rights. And I originated and founded a team based on responsible technology, based on my background in both big and small tech, focused on issues of data privacy, dignity, and new forms of power. So very much a small checks investor compared to the others on the panel, in that I was funding work from sort of 50K up to a couple of million. And, you know, great variety in our kind of work, from funding sort of for-profit startups focused on organizing people, down to products such as Ethical Explorer, which is a toolkit designed to help product designers, engineers, and their collaborators make better choices around issues such as climate change, data ethics, AI bias, and issues that I think we're all very aware of in this space, but often don't know how to approach. Thank you. And also, I'm a very active angel investor, mostly focusing on new power, and inverting traditional leadership structures.
Thank you, Sara. So let's start with Jeffrey. I think probably the audience is thinking on how investing in solutions for Indigenous communities in Canada can be really a financial opportunity for a fund, for a venture fund. So the question is, isn't it smallish? How big is the market? At the end, these are the questions that typical fund manager ask and the LPs. Do you look at the same criteria as any venture capital fund when you are trying to invest? And I will ask, after answering this, please explain us a project so we can really visualize what you are talking about.
I love that question, because a lot of people think that the Indigenous space is a niche space in it. You know, what's interesting is the current Indigenous economy in Canada alone is about $32 billion annually. It's growing, they expect, within the next decade to about 100 billion. And that's just the Indigenous component within the Canadian economy. And it's a very high growth rate. What's really interesting is in the, you know, in the historical context of Indigenous people globally, particularly in Canada, Australia, and New Zealand, you see a pivot from survival post-colonization to a thriving mode. Now, what's come out of that is a lot of creative and innovative energy. And Raven, as a venture capital fund, you know, when we first opened the fund, the thesis was, well, let's prove a bunch of Indigenous people with Indigenous capital can make investments in the Indigenous space and get good economic returns and high impact. Pretty simple, but it hadn't been done before. So we started out, well, let's do a $5 million fund. We ended up with a $25 million fund, to give you a sense of the energy around that. We are 9 to 10 investments deep by the end of next week. We'll close a couple of more, and we're really in a venture capital, Indigenous venture capital space. And that's a high touch space, as I think our panelists know. We only take minority, usually significant minority positions, but only minority positions. We always take seats on boards, and we basically, our investing philosophy is about relationship. It's the Indigenous epistemology. We're in relationship with everybody. I'm in relationship with you and with Mother Earth, and then we look for really strong Indigenous impact narratives, and that includes both environmental, a lot of times social. You know, strangely enough, in our portfolio, we're very social as opposed to environmental, but that's because we are sector agnostic to start, and we're looking at what's in the ecosystem. But to get a sense of that ecosystem, we started with the 10 to 12 deals when we first started the fund, like, oh, these look really good, but is it the cream of the crop, sort of thing? I can say today, we have a deal pipeline of about 50, which we do not have enough capital to support. Interestingly, there's a high in our fund. There's 60% of our fund is both female founder, and it's tech or tech enabled. So SaaS, fintech in the Indigenous space. And My comment on those businesses in this marketplace, and we're seeing more of this as we expand into the United States, is these aren't just good Indigenous businesses. These are best in class businesses on their own. So it deals a little bit with that systemic racism and bias about Indigenous investing. When we set out the fund, all we said is to our investors, we had 38 investors. It was an interesting process in the first fund, is that we'll do a 6 to 8% return on the fund. Now that's definitely lower than you see in VC, especially Silicon Valley VC. But we don't want to make outside promises. Venture capital in the Indigenous space is basically like a dragon or a unicorn. You think it exists, but you've never seen it. So just going into that space and sort of understanding who's in there, what's the deal flow look like? And I can tell you it's extraordinarily robust and it's extraordinarily resilient through COVID. And right now, as it looks, we have 2 or 3 businesses that are looking at 7 to 8x from when we went in 18 months ago or 12 months ago. So it's really a fascinating space. You asked for an example, so I'll get to that quickly because I'm taking too much time here, I think. So one of the examples is a company called Virtual Gurus. And very interestingly, it was an Indigenous queer woman who started it, who used to work in the oil patch, heavy oil sands, lost her job in that, and then started this business as a 2-sided digital marketing place, matching virtual assistants, project managers, those sort of folks with companies through a platform that also does upskilling at the same time and works in remote communities. And that company has seen a 500%, if I think back about it, 12 months ago, the company is probably doing $10,000 a month in revenue, and today it's about $450,000 a month in revenue. And it's expanded more into the US than Canada. And it allows remote Indigenous work, where these are very hard communities to get work in, by the way, and this upskilling. So it has all kinds of, for the impact narrative, it has huge impact narratives that we're going through the process of working with companies on that impact narrative. But I just want to say that at the core of our investing, when we look at impact, it has to be intentionality. What's the intention of the enterprise? It's not just a feel-good exercise for them, a CSR exercise. Is what's the intention of the business? But I'm happy to say there are lots of Indigenous businesses, and by next year we'll do $75 to $80 million fund too, and then we're doing a fund in the Arctic as well. It's a little bit different, so. Thank you.
Thanks to you, Jeffrey. And I think if we were saying at the beginning of the panel that we would talk about diversity on impact investing, I mean, you are an example, and you have shown us about a $32 billion market that we thought it was small niche, and with a lot of potential, best-in-class projects that they show really exponential growth. So really, when we talk about impact investing, we talk about profitability. And I think this is a message I would like to strengthen as we talk, because it's really, there are returns when you are impact investing, and that's important. I would go now to Lauren and say, NatureVest develops investments that protect nature. Okay, you mentioned before, like the verticals you were working with, including climate solutions. But could you explain further your targeted areas for developing investments? And can you walk us through like an example of the project? I really like when you put examples, because then we really visualize and we see, okay, that makes sense. So Lauren, please.
Sure. So all of our projects have to fall into TNC's 3 priority areas, although I would say that I think there's more overlap between investor interests and conservation in certain areas. So examples where we have a higher density of pipeline would be in agriculture. So sustainable agricultural practices with outcomes either around water, whether that be water quantity or water quality, or soil health, carbon sequestration, reduced runoff. Forestry is a very important area right now, particularly as a lot of investors and corporates are looking to figure out different ways to offset their own footprints. And so sustainably managed forestry projects and investments are a big part of our pipeline. And then we also have some more catalytic areas. And that's why I was saying we kind of focus on 2 different ends of the market. One is more established sectors where we can structure transactions that look a little bit more familiar to larger institutional investors that look like private equity investments or private debt investments. And then there's what we call the catalytic side of the market, where we're looking at things like blue carbon, which is a relatively new market that needs some of that, a little bit of a push with some more catalytic capital, as we like to call it, but that really just means concessionary capital. Investors who are willing to take on more risk for a market that is not as proven. We're also, looking at interventions that relate to large landscape or ocean protection. So we do, we're looking at a project in the ecotourism space because of the strong links to conservation. We work with sovereign countries around restructuring their debt in exchange for conservation activities and concessions. So it's really all over the map. The example that I will give, though, is one that we are now trying to replicate. So it's the large end of the spectrum. So it's looking more at working with institutional investors. It's our $900+ million fund, which is called the Sustainable Water Impact Fund. And the reason I'm talking about that one is because the bones of that fund is a structure that we're looking to replicate and actually have replicated. So in that fund, we partner with an investment manager that has a strong track record in making real assets investments in agriculture. And TNC comes in and plays the role of conservation advisor. So we have a contracted role as conservation advisor where we set the objectives of this investment fund from an outcomes perspective. We review every single new investment that goes into the fund, and we help to manage the asset management plan and disposition plans for the investments with a sole focus on the conservation outcomes or any social outcomes. So we're genuinely adding value, quantitative value from a conservation standpoint and from an outcomes perspective to each investment. And that's how we've structured the collaboration with our partner. And so that's kind of a way that we have been able to tap into, scalable investments. This is a $900+ million fund, but ensure that there are outcomes that TNC is setting and verifying for each investment that goes into the fund. And that conservation advisor structure is something that we have successfully ported into the forestry space. We've done a smaller, more catalytic fund in the ecotourism space, which has had a first close, where we've used that same model, where we rely heavily from the investment side on a partner that has a really strong track record in a given space. But then TNC's real value add is structuring in conservation outcomes and vetting each project to make sure each project genuinely will add something from an outcomes perspective, either environmental or social, or ideally both. So I'll stop there.
Thank you. Definitely, you are a catalyzer and just putting the rules to measure how it's everything done and that it's done correctly. And Sara, last but not least, you're a business angel investing on impact startups, and you work for a company that help company create impact solutions through responsible technology, remanaging capitalism. Could you explain what was the philosophy on that company? How did you choose the customers, and how did you create impact for them?
Yeah.
And of course, I will ask an example, please.
Of course. And I think it goes back. So, there are so many ways of having impact in the world, right? And certain funds really specialize. For example, Lauren's, classic VC is all about ag tech these days, but will never have the depth of knowledge that a distinct fund with a specialism brings. I think with Omidyar, having funded companies for a couple of decades, we kind of kept coming back to what Jeffrey said earlier around intentionality. So many of the large technology companies of the last 10 years have meant incredibly well. And then when their products have come onto the market, and I'm thinking particularly of social media platforms, they have caused harm to certain communities. They have caused harm particularly to young people. They have distracted us in terms of our attention. So taking one example of work that we funded, which is Ethical Explorer, it really came from looking across our portfolio and thinking, okay, how do we practically help people building companies bring their values to life? It's not enough just to have principles. You have to really operationalize these principles. And we looked for a while, my team were looking for things to fund in this space, resources, toolkit, education, masterclasses. And we funded a bunch of stuff like a spin out from Stanford led by Rob Reich, the philosopher, that really is an evening class helping tech workers learn about certain topics. Everything from systemic racism and how it shows up in product choices to the US military's ties to the tech industry. these things are what many people building companies don't know enough about. And we thought that knowledge was power. So having realized nothing really existed in the space that we really wanted it to, we found a partner and built it ourselves. And this product really, which came out almost a year ago now, has just won the Fast Company's Innovation and Design Award and has been downloaded 500,000 times. Ethicalexplorer.org. It's a very simple, stupidly simple, you could argue. It's a very practical card set that you can use that takes 8 risk zones from kind of outsized power and monopolies. And to me, it's kind of a win to get monopolies into a conversation in this space, to bias and AI, to data control, to surveillance, and takes the reader through both an explanation of what this harm is and a set of open questions that determines where the company is now and where they would like it to be. So many of the companies we were targeting were not impact first companies. There were companies that wanted to make a difference in the world, but perhaps wouldn't call themselves impact. And I think language here kind of matters, in that we very often silo types of company. We say that traditional tech companies are here. They're very ambitious, they're fast growth, and impact companies are here. And they may have, we sometimes stereotype this group as low impact and low horizon. I believe both stereotypes are false. And I believe that really any modern business launching now has to make a real difference in the world. This is what customers are asking us for. This is what tech workers are asking us for too. And I think the 2 sets of examples you've had so far really speak to this. Helping Indigenous workers find meaningful work where they live, to me is an incredibly powerful example of not just a commercial demand. I love virtual assistants, but also a real difference. Meaningful work matters, right? And that's somewhere where that's a perfect example where you can make money, do good, help folks find work, everybody wins, right?
Right, that's amazing. We are really looking for the intentionality, the purpose, and really making an impact. And that's why we are here. And you mentioned one thing, and the question is for the 3 of you, but I think we will start with you, Sara, because the question will be, would you say that technology has increased the opportunities of impact investing? I mean, has it increased the number of projects that have both impact return and financial return, and that before, maybe without technology, were not so possible? What do you think?
I am not an experienced enough impact investor to really answer this. I suspect one of the others on the call might be. But, I would argue, certainly in the world that we live in now, look at this call. All of us are physically based in different places and we can be together. We can exchange ideas. We can find each other. I think there are many ways that technology enables connection, but I also think so much impact in the world comes down to people getting together and choosing to do a thing. It comes down to trust. I think technology can help with that, but really this innate desire that we have to be together, to build trust, to make something good happen together, I think has existed since time began. It's just technology has enabled it to happen more.
I would add, I'll just jump in here, that I think for the conservation side of things, for the impact side specifically, I think technology is helping significantly at making impact measurement cheaper and easier. And I think, things like measuring carbon sequestration potential or measuring soil health or measuring water that's saved, all of those things used to be either impossible to do accurately, which made it really difficult to structure an investment product where you're actually reporting out or even getting paid on the outcomes based off of that. But also they were so expensive to do. And some of them still are very expensive to measure. But the expense is kind of what made it impossible to make them investable. They were really they had to be philanthropically funded because there was no way to really get a balance of cash flows, positive cash flows to investors. So I look forward to, at least on the conservation side, continuing improvements in technology that will help bring more things into the investable realm for us.
Yeah, I'll just add a little bit into that. I agree with both my colleagues here on the panel. I think technology has definitively improved impact measurement, made it somewhat easier. And for a while, I've said no one really wants to pay for the measurement side. So you have to find a way to kind of drive efficiencies into it. And more platforms are getting better and better at it and making it easier. On our outcomes financing work, which is specifically outcomes driven, technology is a must, especially in remote communities where we work, and the interventions that we have in place. The second thing I'll say about it, in Indigenous context, technology is an enabler of different businesses that allow people to create a business in the image of their culture, meaning they can stay on the land where they're from, they can practice traditional practice and still get engaged and have access to both information and resources that otherwise wouldn't be available. So yes, it's helpful in that. The last thing I'll say is to agree with Sara. We just had a conversation yesterday with our team, our analyst and associate. We have an investment in northern central British Columbia, which is a full cycle Indigenous agriculture, like a farm / training / greenhouse development and all sorts of things. And we've got to go. And we've got to go in person, and we've got to see this in operation. And to be honest, it's impossible to replace that with a Zoom call or a Jitsi call or whatever call you want to call it. So there's still that human contact that we desperately need in order to just do a certain type of due diligence on the impact narrative for sure.
So I think that's an interesting angle that you are attacking. It's like, okay, technology for measurement. So we are talking about the KPIs. For impact investments. Can all the impact investments have KPIs? Or you were saying, Lauren, that if you cannot measure, maybe it's philanthropy because you don't have the way. So how you manage that? And I will even add another question on that. It's so there are impact funds that have also the social carry. But for having a social carry, you have to have KPIs to measure. So not everyone is possible for us for an impact fund because you cannot measure everything, or yes, we can measure everything, or should all the funds have KPIs on impact? So a lot of questions that all related. If you can, I don't know who wants to start because I throw a lot, but are all related.
Well, I'm happy to start. I mean, my answer is the most obvious because I work for an environmental nonprofit that really values its science-based and having genuine outcomes associated with everything we do. So we would not be able to do a transaction at NatureVest without strong KPIs. But I would also say, I think the market is trending in that direction. I think investors are getting smarter to the conversation that we had before, or was had before our panel about greenwashing. I think previously you could have green funds that didn't really have targeted KPIs, but the market is getting smarter. And I think investors are demanding outcomes because without KPIs, how do you know that impact is being done? And so I think that's just, to me, all of the investors that we work with, whether they be small impact first investors, but even the large institutional investors that are starting to carve out ESG funding, they're really requiring KPIs from us. And they're actually requiring incredibly vigorous ones, which I admire.
Thank you. What do you think, the others?
Yeah, I'm all for KPIs within the space. There has to be a little bit of agility maybe and flexibility in that because certain of the businesses don't operate or, standardized processes don't work as well. So, it becomes an investment by investment basis. How can we work with these KPIs? I mean, as I've always said, we can count jobs till the cows come home and economy and stuff. But if we really want to get into it, and one of the expressions we use is we need to see a direct line of sight between every dollar that we invest in the upliftment of the community, the Indigenous community. So how are we going to do that? And so we do employ traditional methods like Indigenous storytelling and oral knowledge. And we go into a process of data harvesting, for lack of a better word, through storytelling, and pull out of that storytelling KPIs that we didn't know that we had so that we can report up. But we also invite our investors and our portfolio companies together twice a year in a feast where we talk about outcomes measurement, and the investors really enjoy it. It's been a virtual feast a couple times. Unfortunately, it's not our way, but we bring people together. Here's the companies we're investing in. Why don't you meet the CEOs and some of the founders and really get to know what they think their impact is? And the investors they really get into that. So hopefully that's helpful.
That sounds incredibly delightful. I mean, I love that, a feast where you talk about, that's just so cool. Yeah, it's interesting. Omidyar's unusual in that obviously one funder. I mean, I do very much broadly agree with the other two in that, KPIs are very important. You have to understand beyond the capital return, what is the impact or influence this will have in the world? I do think that I can definitely think of a couple of bets that I've taken where, particularly for things that are atypical, such as policy work, where the KPI or the result or the social impact is not necessarily a sort of KPI as such. So, for example, I funded some work last year on antitrust, where there was an obviously incredible KPI in terms of the US announcing a bunch of antitrust laws at the end of last year, or work towards laws. And in that case, that was a very speculative bet that I took that I don't think we knew would pay off at all. So I guess I always think in terms of portfolio construction, against your investing thesis. So for example, in the case of investing in communities, maybe sort of 80% of that work goes into things that might look a little bit typical in terms of like financial return, social return. But I very much believe in taking a couple of outlier bets that are perhaps more unusual in terms of the kind of impact they can have and the kind of way you might measure that impact.
My takeaway after listening to you, it's like, okay, we have to define KPIs. KPIs can also be redefined, and we can find new ones, but this is not enough. We have to find a really efficient way to get the KPIs. Otherwise, it makes no sense for the investment. So we here have a challenge, and you didn't answer me the question about should all the funds have these social KPIs or only the ones on impact investing? Because, or maybe you could say not now, but it should be a trend. Should we define, as we define also the ESG, and now we are moving to the SDG, and so should the social KPIs be included in any fund, even if they have or not the social carry?
I mean, I think the more that we're able to come to some kind of industry-wide standardization or like common agreement about how we want to measure things, I think it will make it a lot easier for founders, for media, for LPs to kind of understand where things are. But it's complicated. If Schroders announce their own ESG goals and can't stick to them, what does that mean for the rest of industry? You get these tentpole moments where BlackRock say this and blah say this, and that's great. That does help, I think. But at the same time, without there being industry-wide agreements around what good looks like, I think it makes the whole scene a little bit too fuzzy for my liking. And I think the more that we're able to move beyond fuzzy to both have stories and metrics against those stories, I think we'll see true progress.
Okay, we should talk about that maybe in 5 years and see how we are doing on that, and if this will be really a reality. We are arriving to an end. I will keep the closing question for the end, but first there are some questions of the audience that I will just make to you. So the first one is, as a consequence of the pandemic, are there some areas that are more urgent to address by impact investors?
Well, I mean, what I've seen, in my opinion, of what's been demonstrated is the pandemic exposed fault lines in society around financial and social exclusion. And I think if I was I am an impact investor, but as an impact investor, we should really be looking at poverty. We should be looking at inclusion. Sometimes that gets mixed into housing and some of that sort of other infrastructure pieces. The pandemic exposed all that. And of course, healthcare. I mean, Canada's healthcare system, more similar to European systems, but it's exposed but there's still huge problems within the healthcare system. So I think the pandemic, the financial and social exclusion really worries me, because those who were doing badly before did worse. And those who were doing well did better through the pandemic, by and large, which is, I don't think, what we want as a society.
Someone else want to answer this question?
I can answer I agree with everything that Jeff just said, but from putting on my environmental hat, I think it's also really exposed or made very clear the linkages between humans and nature, and that when humans suffer, if people are out of jobs or they are just subsistence, looking for food in various different ways, then oftentimes nature suffers. So what we're seeing is in Africa, lots of areas that were protected very well for the past 15 years have had increases in poaching, increases in conversion of land to agriculture, because the communities around just are desperate and need new access to income or food or whatever it is. And so when people suffer, nature suffers. And I think it just lays bare how closely related we are. So we, at the Nature Conservancy, we have several different products that we're developing that are some philanthropically funded and some that we're structuring that are investment, targeted at largely social relief, but the outcomes will be social and environmental, because by helping people kind of bridge this pandemic and make it through to the other side of the pandemic, we can protect conservation gains that we'd achieved before or help move conservation forward as well. So it's kind of a genuinely triple bottom line opportunity.
Sara, you want to build on that? Or I launched the next one. Okay, so they are saying there are huge opportunities to do impact investing and projects in developing countries, but political situations and risks become an issue in fundraising. How one can overcome it?
I mean, we don't do investing in low and middle income countries. We're, obviously in what I would call low and middle income communities inside developed countries, which is a strange, on the Human Development Index, if you look at Canada, it's 7 or 8 regularly. The Indigenous communities are 64th, 65th regularly. So we are in that space inside a space trying to right the injustices of the economy. So I don't know if I can help so much on LMIC countries, but there is political instability in there as well. For us, it's all about long-term relationships and building trust-based relationships that'll last the test of time, that'll be resilient. But, perhaps Sara and Lauren, more to add there.
Well, I'm glad to jump in again. So I think there are tools that can help de-risk developing markets. So there's obviously political risk insurance. A lot of the DFIs can offer that depending on the countries that you're working in. And then there's also the blended capital structure that is very often talked about and not often executed. But there are opportunities to kind of blend in more catalytic or concessionary capital to de-risk a structure in order to attract more traditional capital at scale into riskier geographies. In NatureVest, we use those types of tools both for riskier geographies, but also for riskier investment areas, like as I was mentioning before, blue carbon, or areas that don't have as much of a track record. But we have a very active pipeline in the developing market, particularly, actually no, across all areas of the developing market, and usually some sort of guarantee or political risk insurance is necessary in order to attract capital at scale. Otherwise, you're looking at smaller niche projects that are funded by people that are just very, very interested in the impacts and willing to take on that additional risk.
Interesting. So from another question from the audience is, from the perspective of an asset owner, how to choose areas to allocate capital? What do you recommend for them?
I mean, I think that's really hard, right? You have to kind of start with basically the experience that your team has and your passion. There are so many challenges in the world. So for example, Omidyar doesn't do climate, which many of the team are incredibly passionate about, and feels like a huge opportunity that we should all be throwing as much money as possible towards. But at the same time, if you have a team that has no existing experience in that, perhaps it's wiser to leave it to those that have more knowledge. I think with any fund manager, I would start with kind of your personal experience, your personal passion, the opportunity that you see, the kind of deals that you're naturally seeing. Any area can be grown into, but at the same time, I would kind of always start with how you can be a value add as a whole.
Yeah, I was just going to double down on that. I mean, for us, it's where can we add value to these enterprises? Where can we have impact? We do some climate work. We're by no means in clean energy work, by no means experts. But we want to have impact and grow and scale this impact over time. So we're kind of focused, where do we have skills? Where can we have impact? Where do we have relationships? And then other than that, we look for co-investors who do bring those skills in to deal structures when we don't have it ourselves. But I think you have to start with your goals, your skills and your goals. What do you want to achieve in your fund?
So at the end is consider yourself more than just money. What are you going to bring over the table apart from the money? Another question about greenwashing. It has been talked, this said 3 times during the day, and it's like thing that we have when we're talking about impact investing. But here the question is, has greenwashing, although we want to eliminate it, and we were saying that, has it helped to spread the word about it, and has it helped to more people looking at impact investment, or is really hurting the impact investment?
That's a great question. I think the answer from where I sit, and this is a personal opinion, I think it's both. I think it helped to spread the word because for a while, like there was this boom in the green bonds market like 5 to 10 years ago. And most of those actually delivered very, very little, if not no, outcomes associated with them. And it was just a really clever way to get cheaper financing in the bond market. But they got people talking about green bonds, and then they got organizations like mine and others to come in and put more strict standards around that. And then it got investors getting upset about greenwashing, which then started the movement in the direction of where we're going. So I would say, begrudgingly, I would say it's been helpful. That being said, it has distracted a lot of money, like a lot of money that was well-intentioned, but maybe not all the way well-intentioned, or maybe not completely educated about what they needed to look for. We're very happy to tick a box and invest in a green bond and say, okay, we've done our thing. And I think that has been a shame. And again, I see that changing. I think a lot of the big banks and a lot of institutional investors are setting up legitimate shops to, have people that are really looking at the outcomes to make sure that the money is going to a place that'll deliver outcomes, which is great. But a lot of money has been invested into things that aren't ever going to really deliver outcomes, and that was a missed opportunity.
Yeah, I totally agree with Lauren on that. I think, with the trend towards ESG, I think it's the right direction of travel for global capital. That's where we want to be going. Now, in that space, are we going to have bad actors or not so great actors, I should say? Of course. But it makes you ask us this question on this panel about greenwashing. And we have something in our work called red washing, where people want to invest in Indigenous stuff, but doesn't go very deep, in terms of what's the real impact on those communities. And I think, those are real issues. What I'm seeing is a little bit more of, is what Lauren said, is there's a lot more purpose and intent behind some of the big institutional pension players and others towards doing resilient and robust green investments, or at least trying to get there, and realizing there's a bit of scrutiny on that side now.
So it has helped, my conclusion from what you say, it has helped to make it mainstream, but there has been a lot of hurt money during the journey, money that has not been well used because of this greenwashing. And that's, okay, it's done, let's finish with it, and let's focus on what's really mattering, and let's do real impact investing. So to conclude, because we are arriving to the end, I would like each of you, if you could share a short message with the audience about investment and sustainability. What, if you only could say something very, very short, what would you say?
I can go first.
Sure.
This might be controversial, but I'm absolutely convinced that we need a third language. I don't love the frame of impact investing. I think we need a new way to kind of talk about making change in society for the positive that uses new energetic language that helps to bring folks together. I think coming from a traditional tech background, there is a perception of what impact investing is that doesn't reflect the folks that I know who do impact investing, that doesn't reflect the kind of exciting companies I see and fund. So I would make a call for new language that bridges different types of people, different attitudes, and helps direct us towards the future.
Love it.
From my perspective, I mean, do more impact investing, or whatever you want to call it, Sarah, at the end of the day. Get more involved in it. Check your own risk perceptions and your risk biases. And as much as possible, try to support local intermediaries who do this work, because that's really where the hard lifting get done, is by local intermediaries who are bringing in deals and who are doing that management side of things and really create change on the ground. I'll stop.
I agree with everything that all of my colleagues said. I would also just say impact investing doesn't always have to mean a compromise. It doesn't always have to mean that you're going to lose money or not make as much money as if you put your money into something more traditional. And I think impact investing is growing in so many different ways, and outcomes are being built into so many different types of products now that there are ways that you can make a difference without sacrificing too much. And so there is a perception out there that impact investing is all concessional and you're going to lose your money. And that's not true. It may have been true once, but it's not true anymore. So that's important to take away from this.
Thank you. Thank you. Thank you so much to all of you. I think you have proven that there are so many ways to make impact investment in different areas. So it's not just the typical. And as you have said, impact investment has return on investment. It has profitability. It's not philanthropy. And I think that's really the message. Look for the projects that have really an impact, that have a goal, an internationality, and that have a return, because they will be sustainable and you will get more money to reinvest in more impact projects. So thank you very much. I hope you have enjoyed as much as I've done, and see you in another chat. Thank you.